Well, when we are looking at how global cues are lining up early today morning, the US indices closed with sharp cuts yesterday, largely on the back of continuing increase in bond yields. That 8.6% inflation print, which came out on Friday, came in around 30 to 40 bips higher than what most were expecting. But most importantly, the March print came in at 8.5% year on year. The April print came in slightly lower at 8.3%. So when the May print has gone to 8.6, the trajectory of the graph has gone higher now rather than remaining flat or going lower, and that's what's spooking investors, and largely on the back of how they believe the Fed will respond going forward. And largely what economists on the street are expecting now is that the Fed might, there is a possibility of a 75 basis point rate hike in this meeting, which is this week. So outcome of that will come to us very shortly, and that's what's spooking markets at the moment, that inflation continues to be outside the control of central banks, especially US inflation. The Dow is down now 2.8% on Tuesday. It's now down 17% from its record high. The S&P 500 clocked losses of around 3.8% on Tuesday, 3.8% lower. It's below that 3750 mark now, clearly breaching certain levels, and it's well into bear market territory as well. It's 21% lower from its 52-week high, which was clocked in January of this year. Moving quickly on to the Nasdaq, it's down 4.7%, sharp cut there in the Nasdaq. It's closed below the 11,000 mark, and now the Nasdaq is down 33% from its high. So clearly signaling lower. Just to kind of try and understand how wide the losses were, only 5 out of the S&P 500 companies clocked green in trade yesterday. All of the others were in the red. And of course, that inflation print as well as the FOMC meet and the outcome of that is in focus, and investors are looking out for that. Moving quickly on to European indices, it's been a secular red on global markets, across global markets yesterday. When we're looking at the DAX, it's down 2.5% almost. The FTSE is down over 1.5%, and the Stock 600 also down nearly 2.5%, 2.4% lower in trade yesterday. The poor handover to Asia has led Asian indices also to open in the red in early trade today. The Nikkei is down over 2% in early trade. When we're looking at the Kospi, it's down over 1.5%, but the real losers, the Australian, the ASX 200 is down over 4.5%. Real carnage happening there. When we're looking at the Shanghai and the Hang Seng, both are down around 0.5 to 2/3% in early trade today. So clearly negative cues coming out, where the SGX Nifty is concerned, a more marginal, more tempered SGX Nifty futures looking just slightly more than 0.5% lower in early trade today. So clearly some signs of it opening below 15,700 is where it's currently at. Moving quickly on to commodities, well, oil prices saw a good spike. It's been a volatile market even within crude, and oil prices are now above that $121 a barrel mark. That's where it's at. Gold prices though have seen a massive inversion. They've gone from rising very quickly on Friday after that inflation print to falling very quickly as bond yields have gone up. So gold prices have tempered down. Gold is at currently around $1,827 an ounce, well below that 1875 which it clocked. Moving quickly on to bond yields, they will be in focus. The inversion has happened again between the short term and the long term bond yield curve, especially for the US, signaling a recession. The US 10-year yield currently at 3.38%. That's where it's at, and a very sharp rise that we've seen in bond yields of late. Mind you, versus the December number, bond yields are now currently up 1.8%, 1.8 to 1.9% higher. For the US 10-year on a 3.34% base, to be that or to fluctuate that much is quite telling of the kind of times we live in. Moving quickly on to cryptos. Cryptos have obviously largely on the back of those higher bond yields that are on offer. There's a risk of trade in play, and cryptos have fallen from the 30,000 mark to 21,000 is where Bitcoin is at, 30% down, and it's down nearly 25% in the last day or so. So clearly Bitcoin beaten, overall all of cryptos currently completely beaten. Negative cues currently on equity markets at the moment, the way the Nifty, SGX Nifty is directionally showing us.